let us try to understand what is this underwriting all about. Underwriting is going to be very crucial for the insurer's success. While evaluating applicants, underwriters will determine whether insurance applicant will be rejected. The long-term benefit or the short-term benefit has to be given to the insurer at that time point. Good morning and welcome to the first session in Unit 4 in Principles and Practice of General Insurance, where we are going to talk about an important topic called as the underwriting claims. Now, underwriting is supposed to be a very important function in insurance. Let us try to understand what is this underwriting all about. Now, the first thing is, insurance underwriting is defined as the process of choosing who and what the insurance company decides to insure. This is based on risk assessment. Now, first let us understand that insurance is a subject matter of coverage on risk factor. So the insurance company will make its own choice in terms of covering a particular asset or a life based on the risk factors that are involved. So as a process of underwriting, the underwriters, the people who are involved in this department, will take up the assessment of why you need to cover that subject or asset, in what terms and condition, what are all the risk factors that are there, and based on that, the insurance will be decided. So what is very important here for all of us to learn is that insurance will always go through first risk assessment. It is not that since we have applied for an insurance and we have been granted an insurance coverage, we are definitely going to get the claims. It is not something which can be taken for granted. There is always a risk assessment, a portfolio evaluation, complete personality evaluation as what, why, when, and how much you need to take care. So based on all these factors only, any insurance plan is designed. Moving further, insurance in the underwriting, it is pretty much behind the scenes. Now, let me just tell you that factor, why behind the scenes, which means to say that underwriting is not a subject of matter which will be disclosed to the public every time or every day. It is always behind the screen, which means it is at the back end of the insurance company where they sit and they assess how much insurance premium will be charged per person, that is the insured person. So the underwriters are basically from the diverse backgrounds of risk, statistics, they might be from science, they might be from biology, they might be from different backgrounds altogether. They sit together, they analyze a scenario, they analyze the risk behind that factor, and then they decide how much premium should be charged for the insured person. So this is going to be quite a complex exercise because you need to go case by case, understand the importance, understand the various factors that are involved, and then only you can start putting up the premium towards the client. So this is a quite challenging process altogether. Now, underwriting also involves choosing whose insurance company will not insure. That is, now when I'm going to talk about I will not insure, that means to say that suppose the insurance company feels that this is too risky for us to take under insurance coverage, then I will not go ahead for insurance. Why? Because even the insurance company will keep a margin for themselves, which means to say they will keep a benchmark, a line for themselves, saying that these are the factors which is well under the risk and these are certain factors which are above the stated risk. So when things are above the stated risk, I will not take the risk of covering up or insuring that particular activity, asset or life. So that is why insurance company will decide first what are the things which we will not go for insurance and what are the things which will be covered under insurance. Moving further, the purpose of underwriting. Now the purpose of underwriting, there are multiple purposes as I'm going to describe you. Now the first thing is that the predominant purpose, the most important purpose here is to maintain a profitable book of business for the insurer. underwriter. It is crucial for an insurer's success. Now, without assessing the risk, without assessing the value altogether, it is very, very important for each one of the underwriter to understand the formalities, to understand the situation very, very clearly. What do I mean by saying this? Now, the underwriters are the people who will assess the value, who will assess the systematic evaluation, the pattern under which how the business is working, how much we can take risk, what are all the factors. Based on all those things will be the pattern altogether. So that is why I always say that this is a risk matter governance altogether. It involves a lot of thinking, it involves a lot of patterning altogether to understand the business. Now, what is going to happen here is that underwriting is going to be very, very crucial for the insurer's success. Unless and until they have clearly given the indications to the company how much to insure, how much the premium we can charge, where and all we can make the margins, how much should be the premium top load, how much should be the premium bottom load, all these factors have not been clearly mentioned, then the company will not be able to make success. So the underwriters will work on claims, will work on percentages, commission, risk factors, all those things, and they will give a broad scenario to the insurance company stating that this is what we need to do, followed by the underwriting goal will follow directly from the insurer's corporate strategies and objectives. Most of the insurance company will also have their corporate ideas, visions and strategy. The underwriter's ideology will try to match towards the corporate vision and strategy. Why? Because the primary ideology is to make money out of risk coverage. So that is where the insurer will directly follow the underwriter, and the underwriter will try to help the company to achieve its objectives in the long run. Followed by the second purpose, as we keep talking about the purpose of underwriting. The other thing is that it's the common form of all insurance. So not just the health insurance part. Why? Because normally, let me try to say here, people always understand the factor of insurance only from health standpoint, from life standpoint. Even when we talk about motor insurance, or when we talk about fire insurance, aviation, marine, hull, or when we talk about theft or burglary, or any kind of natural disaster kind of thing, climatic and all those factors, we will still work on the underwriter's part in terms of estimating the risk. So for an underwriter, the most important thing is that he will evaluate under what circumstances the risk can fall, and we have to avoid the risk as far as possible, because the company will be able to bear the risk only to a certain level. Beyond this level, company will not stretch itself. So it's very, very important for all of us to understand in the sense how to take up the insurance. Now, for example, an automobile insurer will charge higher rates to young unmarried males, or it may refuse coverage to drivers with a history of accidents. Quite obvious. Why? Because the young people are prone to drive more rashly compared to the older adults. So because their mindset is more faster, their mindset wants to take the risk, they want to drive faster. So what happens is that the chances of getting into an accident is much more higher in young unmarried adults comparatively to older adults who are married. Now, this is a general statement. I'm not making it specific. There are chances. That's what the company has assumed and understood. So that is why they will be charging higher premiums altogether, followed by which, now when I'm going to give a insurance coverage for a driver where suppose his accident history is too high, then definitely not. Why? Because I know that this guy is prone to make accident. So again and again, if he keeps on doing the same thing, then he will come back to the company for claim. So in that scenario, I will avoid giving that driver any insurance coverage. Followed by fire insurers may inspect properties. They will inspect the properties. They will offer reduced premiums for safety features like sprinklers and so on. Now, this is very, very important. Now, you have an asset, you have a property which is already well guarded, which is already having all the enhanced features that can protect that building or the asset from a fire breakout, then automatically the fire insurance company will charge you lesser premium because they know that you have taken the necessary steps to safeguard the property. So that is why you will be getting into in terms of the lesser premium altogether. So that's what we are looking into in terms of the purpose of underwriting. The next thing is that the underwriting policy. What is the underwriting policy? While evaluating applicants, underwriters will determine whether insurance applicant will be rejected, issued on substandard basis, issued on standard basis, or on preferred basis. Now look into the conditions. Either the underwriter can completely reject the proposal. I don't want to take the risk at all, so let's not give insurance to this person at all. Or it might go to the level where they might say that I will issue the insurance on a substandard basis altogether. Okay, if not 100% insurance, I will give him 50% insurance. In the next case, I might be giving him, okay, he's a normal candidate, let us give him 100% insurance. There might be another candidate who's on a preferred basis because he's on a very, very safety zone altogether. So why don't we give him 100% insurance or even more than that altogether? So I have a rejection case, I have a substandard case, I have a standard case, and I also have a preferred case. So underwriters will choose based on the risk portfolio. Followed by issuing policies on the substandard basis. Where will this factor come? The decision to issue a policy on substandard basis will occur when the risk is not deemed to be outside these standards. For example, okay, it is considered to be high risk, but well within those standards, can be manageable. I know that it is a risk, but still the underwriters find that it is well within the coverage area, well within the boundary altogether. Let's go for this kind of insurance. So no problem at all for me. The insurer generally has got three basic options in the substandard. What are those three basic options? The insurer might charge a higher premium. He'll say that since you are on a risk zone compared to the normal standards, so I will charge a higher premium. Why? Because he knows that this is a risky factor. Since you want an insurance, though it is on the higher side, in order to cover you, the company also has to take risk, so I will charge you a higher premium. The next one is that if the insurance policy is one that requires, it is filed with the state in which the policy is issued and must be approved. Suppose in that place, in the local area, according to the jurisdictions and factors, it is well within the approved, still the higher premium will be charged and it will be continued. Followed by, secondly, the rate may not be discriminatory. The rate with which it is charged will be with the same rate, that is with the same characteristics altogether. I might not give you discounts, I might not give you any kind of external factors by which you think that you can make it through. So why? Because I think that I cannot give you any sort of discrimination, I cannot give you any sort of discounts altogether. You are on the higher risk altogether. Thirdly, in some of the states, higher premium may not be charged based on certain factors. The insurer must of course comply with the status whether higher premium rate is required or not. Now, the state law might state that, sir, we are not allowed to charge you on the higher rate basis. This is not allowed by us. So in that scenario, in that case, insurer must decide how much we need to comply with and what are the rates at which we can charge the premium. Followed by limit policy benefits. Now, the insurer may also respond to the substandard applicants by saying that, sir, you are not eligible for all the benefits that are being issued by the insurance company. I will limit your entire benefits or standards together because I know that you are capable of being a higher risk factor to me. So I will give you only a limited insurance coverage. So that's why I will limit the policy benefits for you. Followed by, again, whether the insurer may limit, it is again regulated by the state factor, because there are several times, let me tell you, one side the insurance company might have its own loss, might have its own risk, but if the state government or the central government puts in a law stating that this must be allowed as a basic clause or a basic condition altogether, so therefore the long-term benefit or the short-term benefit has to be given to the insurer. At that time point, point, the company cannot go ahead and say that I will not give you this insurance. That cannot be accepted at all. It has to be given, and the person will come under the basic factors of the insurance. So it's always that state policy which is going to offer that minimum value, then the company has to give it. Followed by formulating an underwriting policy. How will you formulate a policy? Staff underwriters will try to formulate a policy that will try to match with the insurance person, that is the insurance company. The management will first look into these factors. They will try to see whether their strategic goals and the underwriter's philosophy are matching or not. So you need to match. Now, you might say that company can take up to 25% risk, example, but then company only wants to take 15% risk. So at that point of time, this 15% may not be equal to 25%. So what happens? You need to bridge in a strategy in such a manner so that the company is able to rebound back. It is able to match the underwriter strategy. The underwriter will work out in such a manner that they reduce the risk factors and go with the corporate goals. Followed by the underwriting policy determines the composition of insurer's book of business. The goal of the insurer's book of business might be established by the types of insurance, classes of business to be written, territories to be developed in forms of insurance rate and other factors. So please keep in mind that they will have a composite book of business where each and every data will be written, will be clearly mentioned as what classes, what territories, which comes under which category, how much to be given, how much to be avoided. All those factors will be mentioned here. So that is why the formulation of an underwriting policy is not that easy, because you need to study every section, every subclause clearly. With that, the insurer's underwriting policy is influenced by the management's desired position in insurance marketplace, which is quite obvious. Why? Because the management will also think that this is the point at which we need to stick on. This is the point at which we need to understand. So at that point of time, they will have certain standard insurers where they seek better insurance value on the average factor. And however, they will also seek an opportunity to, give coverage to those areas where it is not covered. So both ways, the company will do a mix and match and see where we can get maximum benefit and where there are opportunities for us to cover further so that the business will also grow for us. With that, I come to the end of this first session, and I hope and believe that this session is of a great value and resource to you. In the upcoming session, we will be talking about the proposal form, covers and notes. Until then, stay tuned, stay blessed and stay enlightened forever. Thank you once again for joining me today on this wonderful session.